Good morning, Trevor.
Morning, Dan. How are you?
Very well, thank you. How are you?
Yeah, I'm very good, thank you.
Let me just make
Refreshed off the weekend.
yeah, excellent. Let me just make you the presenter. Okay. Okay, you can share your screen now.
Okay.
Okay, we're looking at nothing.
Just it's refreshing, yeah.
Yeah.
It's
225.
maybe yeah. And I want to make it bigger. Just bear with me a second.
Mm-hmm.
Oh, it doesn't want to budge. Okay. It's okay. Forgive me.
It's visible. It's visible.
Yeah. Okay. It's got stuff of the chart behind it, but
You see.
okay. I'm ready. Apart from not being able to maximize my screen, rather annoyingly.
No problem. Okay, well, I think we can get started. Hello, everyone, and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel, and I'll pass those over to him because he won't be able to read them himself. We remind you that this webinar will be posted to our YouTube channel in a few hours' time, so if you'd like to watch it again, you can do so there, and we'd also love it if you'd subscribe to our channel and click on the bell to get notified whilst you're there. The webinar's handouts can be downloaded from the handouts tab of your GoToWebinar control panel. If you're having any problems locating or downloading them, please just let me know in the questions tab and I'll send you a link and you can download them. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar, and the second is a CFD guide which details all the different products that we offer at FXChoice. If you're watching this video on YouTube, these handouts will be available in the description box below the video. Please click show more and you'll be able to see the links there. For those of you who don't know Trevor, he's a trading and technical analyst veteran, over 40 years experience. He's a former global head of technical analysis at Bloomberg. So Trevor, without further ado, over to you.
Okay, thank you very much, Dan. Welcome, everybody. We're going to start with the RRG chart of the currency pairs, just to give us a big picture here. But basically, everything is moving together. It's all on the left of the dollar. So this is the dollar here, this vertical 100 reading here. Everything to the left means weaker than the dollar. These are the samples: Friday, Thursday, Wednesday, Tuesday, Monday. So that's what happened during the week. And you can see in the G10 currencies, what the trend was essentially southwesterly. So westerly means weakening against the dollar, and south means without positive momentum. And so that's not good. Looking weak against the dollar, and there's no place to hide. There's no outperformance of the dollar at all. It's interesting to see the yen has stayed almost where it's been the whole time, just in this little corner here, close to the dollar, so correlating highly with the dollar, so no outperformance, no underperformance. It's closest to it, so it's stayed there, whereas everything else was over on the right hand side here when we had got a weaker dollar, but the yen just stayed in its own position there. And then you can see the Canadian dollar is now over here, euro's over here too, so in the bunch really there. And the pound is, if you like, the best way of putting it is one of the least bad of the group. The yen, they're very much the least bad, but of the balance of them, the sterling is the least bad. But they're all west of here, so they're all, in fact, quite bunched up. So basically, they're all doing the same thing. So I'm going to look at in detail the euro and the pound sterling, but anybody please put into the chat box, send a message to Dan if you'd like me to cover some other currencies before we move on to the other markets. Now, I'm going to spend a bit of time on crude oil today, some big things going on there to look at. So suggestions for other currencies other than these two here, but the story is very similar throughout. So firstly, looking at the euro, I'm going to go to the weekly chart in the euro, and we'll see here that last week we had a pretty poor looking bounce here. It was pretty unimpressive bounce. We still got intact the higher lows pattern, the big picture here, so that makes it overall bullish. But this high was lower than that high, so that's not great, and gives us a threatening sort of potential, and it's a long way off and very premature to say this, head and shoulders pattern, high, higher high, lower high, and this would be the neckline down here at 117.50 currently, way below where we are now, and the market sort of steadying a bit here. So most likely it won't end up being a head and shoulders. The MACD is negative on it, so it's, the euro is weak, and look at the behavior during the week. The WEEK week, it really was rather poor, wasn't it? If this is a bounce, it's a poor bounce. Very small bodies in the candles, shadows above here. It doesn't look good, and it really looks like it's weakening. It wasn't enough of a move, steady move, to even cross the MACD here, and so I think there's a danger here that the euro may turn down again and break the important supports that we've got at 118.50 and then 117.50 off on the left here, and that could cause a resumption of the fall and eventually a threat of the neckline. That would be negated, that view would be negated if we broke the high here of 119.75, which is very close, in fact, and then much bigger resistance starting at 120. So it's a poor rally in all of the markets actually versus that dollar fall, and it does look quite threatening, as though the fall, sort of dollar rise, I mean, the fall in in the euro and other markets will resume. Let's look at the picture on the pound. So here it is again, turning over here after a rather weak rally. So here's the sharp fall that we had on the dollar shock advance. Then we've stabilized very slightly at an area of support. 139 area really is where there is good support. This Fibonacci count here is from A, B, C here, and would take us all the way up to an eventual high at 146 if we do eventually get it. And there's really very little to say we won't. Low, higher low, higher low, higher low, higher low, higher low, higher low. It's all still intact, the bull market here. But I must say that this is a rather poor rally attempt in the short term. So this doesn't look this isn't what you would hope to see at this stage as the market puts in a higher low. It looks quite iffy, like it might break down again, break through this support here at 138. That's an important level to hold, 137.90 to be precise, this low and this low here. So it's rather threatening in the context of the big picture of higher lows pattern. So I'm worried. Actually, I was hopeful early in the week that this was going to be the start of a resumption of it, but the latter part of the week really, it lost all energy on the upside and looks much more threatening to break that support. So watch out. And that is, as we go through all the charts, they're all looking like that. So anybody want us to look at any other currencies, Dan?
Trevor, yes, we've had a request to look at the pound yen chart, please.
Okay. All right. So bearing in mind where the yen is and sort of stubbornly holding with the dollar, so it's almost like a synthetic dollar. So the weekly chart is fallen sharply here, along with everything else. We did get a warning of the bearish divergence in the weekly MACD here. So, we had a high, a higher high, high, higher high. Then we had a higher high in the price, now a lower high in the MACD. The MACD is negative, but we are bouncing at the moment. But how is it bouncing? I think it's bouncing rather weakly as well. So we've got all this resistance starting at 155, and that seems to have stopped us last week, and we seem to be turning over again and really looking like we'll come back to threaten the low here at 152.29, even the 150 big round number here. So you know, it looks like the others, you know, it looks quite threatening for turning down again. This rally the early part of last week just doesn't look very good at all, and so, you know, I'm worried about that. Of course, it all improves substantially. The sentiment will improve substantially if we break through the 156 high, but the lows look much more under threat than the highs at the moment. Any others, Dan?
No, that's it. Thank you.
Okay, then. One of the things I missed actually saying was that is to watch the no, it's okay. Sorry, on the dollar index, not the euro. We're flirting with the 200-day moving average, and so a breakdown of that could give us more fall for the dollar, or break up of it could give us more strength for the dollar. But it's always a very tense moment when any major security is flirting with its 200-day moving average. The euro's not. That's the 50 there. 200's out of the picture. And no, here's the 200 here. Actually, here's the 200. So we broke it, and then we're not on it in the way we are in the dollar index, but we moved below it from being above it for a long period of time, and it's completely flat as well. And meaning when you get the 200-day moving average flat, that of course means we haven't got a strong long-term trend, and we're now below it. So it's resistance. It's much more resistance. People talk about moving averages as resistance and support. They're much more effective as resistance and support when they're flat. And so this is now a break of major support, and it will be resistance. And the dollar index is right on it as resistance. Okay, moving to the cryptos now. So everything is, here is the US dollar here. Everything's west of the US dollar. That means underperforming the US dollar. And what direction are they heading? Further west than the US dollar, and also very poor in the quadrant we call the lagging quadrant. And so they've got poor upside momentum as well. Worst of all is Litecoin, and then Ethereum, least bad, but not good in any way at all, is Bitcoin. In fact, I think Litecoin the chart is really destroyed, actually. So the bullish chart is really destroyed. So let's go through them: Bitcoin, Ethereum, and then Litecoin. So Bitcoin firstly. So go to the weekly chart. Now Bitcoin came back to 50% of its rise. Let me just check that I'm saying that correctly. 61.8, sorry, of its rise. It fell 61.8% of its rise. That's a very damaging for the bull case. The MACD is negative and widening, and we've got this consolidation pattern which is matching the first quarter of this year consolidation, which was a symmetrical triangle which marked 50% of the rise here. And so we're doing the same thing here. And what does it look like on the daily chart? Well, it's consolidating. We're ranging, but we're nearer the bottom of the range than the top of the range. And so what are the levels to look at? Is it stabilizing? So it's all going on around 36,000, but the short-term support is 30,000, a nice round number. That must hold. We probed through it, but it rejected it with the shadow here. But that may be just postponed. It really must hold. Otherwise, we're going to leg much lower. There's much resistance above up to 42. So it's going to make it 1,000. So that's going to make it very hard to push forward here. So, you know, Bitcoin, the weekly is very bearish, and it's looking quite difficult. So the And now moving to Ethereum. So Ethereum too is touching the bottom of its range, but let's look at the weekly on it. Here it is touching 61.8. That's a very damaging thing to occur in a bull market. Revisiting the consolidation at the beginning of 2021, but holding it just above, well, let's call 17.5, 1,750 area so far, holding. The MACD is negative. That's a pretty strong bearish message there. Rallies to be sold would be for the traders. So we're holding that 17,500 level, but such resistance above all the way up to 2,750 or more even there. All the way is a solid ceiling of resistance there. So it's going to be very hard for it to push up and make that break up and be anything like what it used to be. So looking much more threatening on the downside. Litecoin, I get similar picture here, ranging, testing the bottom of the range at 120, and this must hold if we're not going to really tumble much further down. So here's the 120 level here, and this broke the 61.8, and that really destroys the bull case completely. Even though we're above this consolidation area here, it's going to struggle and may take many, could be months or years before we're back at these highs up here. So it's looking weak and vulnerable. The MACD is negative and widening. All you can say is it's holding 120 at the moment, but it does look as though it's threatening to break down from it. So a pretty poor picture in the cryptos at the moment. Now moving to gold. Now, bearing in mind what's happened in the dollar itself, the gold has really matched. This could be the euro that we're looking at here, and so gold is doing what it's supposed to do based on what has been happening on the dollar itself. It's come back to quite good support at 1750 from the top of this consolidation from the second quarter of 2020, and above this consolidation from the beginning of this year. But it sold off hard to it. We've got a pattern of lower highs, which is bearish in here, but we've got higher lows, which is bullish in here. So we're pinching into a triangular shape, and we're in the middle of it right now, so supported by 1750. The MACD is crossing down potentially here, but it hasn't done it yet. So on the daily, we spent the whole week with these small candles with small bodies, very indecisive behavior, day after day, pretty well unchanged at this level. So is it getting ready to bounce at 1750, 1760, or is it about to fail? I think more likely bounce, actually, a bit, but nothing too impressive. I just the support is pretty good. But I think really to know what's going to happen in gold, where it seems to be marking, so correlating so highly, you have to look at the dollar. Whatever happens to the dollar will be reflected in the gold. It's not moving independently at all. Silver and gold are moving together. I'll show you the silver-gold ratio. Look at that, very flat there. So neither is better than the other at all. So you might as well do one or the other. Silver chart here is very similar to the gold chart. We've got all this resistance above. It's pretty flat here. It's got support at 25.50 here, big support over there for it, but it doesn't look very strong there, and it will be driven by the US dollar. Before we leave the precious metals, let's look at them versus the S&P, because it's still at a very important point here. So testing it here. Something's wrong with my chart. Just bear with me a second. What has happened here? Yes, that was silver versus the S&P. So gold versus the S&P, we're moving down here. the moving down means gold is underperforming the S&P, but threatening these very important lows here. And, you know, you could say it's beginning to break down. So this would be once, you know, a reinforcing the current message, you're better off in stocks at the S&P than in gold. Moving on to crude, and I want to spend a moment talking about the long-term prospects of crude. Crude's phenomenal at the moment. The only potential worrying thing is the number of consecutive up days. So we've got 1, 2, 3, 4, 5, 6, could be the 7th up day here. And statistically, when you get 7 up days, it's very rare to get an 8th up day. But this is not the destruction of the crude oil market. If we look at the weekly too, 1, 2, 3, 4, 5 weeks, potentially 5 weeks up without an interruption. That's a long run to have without interruption. We can have them, but they're pretty rare things. The MACD is positive. We've broken these 2019 highs very cleanly, and now we're flirting with a very important level, and we are actually slightly above the 2018 high. And I want to bring in more data here because I want to talk very long term about this, because we could be in for something quite important here. So this is the 2018 high that we're flirting, 2019 high that we're flirting with now, and looking like we're breaking. We are technically above it. This is the lead contract, so this is the price of the lead month trading at the time. Then we get just above 85 here for the 2018 high, which isn't in itself, I don't think, a very strong resistance. So I think if we are moving ahead, we're going to push on through that, not really take a lot of notice of it. But what is much more important is the big round number of $100. That's of course very psychologically important. But this area here, and you know, I remember this very, very well indeed, because you know, it was a very unusual thing. Crude oil was for 4 years extremely boring. It just never went anywhere, and the ranges were narrowing up like this. So really through 2011 to 2015, crude oil was really, really boring, narrowing up. So lower highs and higher lows here. And I can remember at that time I was doing quite a lot of TV stuff every week for IG on their channel, and Bloomberg on their channel, and I didn't do it every week on Bloomberg, but you know, before I did the programs, they always asked you, you know, we'd like you to talk about this and that. Would that be all right? I said yes. Anything you'd like to talk about? And I always wanted to talk about crude oil. Because crude oil, I said, it's not natural for crude oil to do nothing. It's just not how it behaves. It's uncharacteristic. I think this market is getting ready for an explosive move. And they say, oh, nothing ever happens on crude. And I just tell you a little story here. I appeared on TV on this high here, just as we were approaching that high. And I said, you know, we're breaking up, because I'd drawn this line through a symmetrical triangle, and we could move up. I said $45 if this break is confirmed. Well, it wasn't confirmed, and we didn't break up, and luckily I can hopefully everybody's forgotten about that. But then a couple of weeks later, I was back again, and I was saying, now we're threatening the bottom of the triangle, and if we could easily fall in $45, and you know, $45 when a thing was trading at $110. That was a big call, wasn't it? And Jeremy Naylor, who was the anchor for that, said to me, "Are you saying that crude oil is going to drop $45?" And I said, if it goes with another 25 cents down from here, I'll call that a good break, and I would add that it will fall $45 fast. And the good thing was to have done that on television, because there it was recorded, but every time I appeared after that, they played that back, because that was one of the greatest calls that I'd ever made. And then for some reason, you know, Bloomberg wanted me on all the time like I was a guru, And they even said one time that they before I was coming on and I was advertised as going to be speaking, they said, "We've just heard that Trevor Neil has entered the building." So they thought I kind of knew everything about the price of crude oil and how it was going to go. But of course, these are often once-off things. I did get it right after that pause there, but I never, after $50, then I was like everything else, and I got it a little bit right, or mostly right, after that. But that was a spectacular call, and I'm glad to relive it for you. But here we look as though we're pushing up again and threatening those highs. And I'm willing to talk big numbers again. I think that the $100 itself, although it's a big number and we'll hit the press and things like that if we get there, I think that we'll punch hard into that big area up in here. And so that's higher than $100. That's more like 110. It's really centered on that. And I don't think that the $87 area is itself going to present a great deal of resistance. The reason for that is the speed of this drop. It was just so fast. So if we're going up through it, then it should go fast, as it is happening here now. But it gets even easier. The friction gets less as we go higher on this. So yeah, it's looking pretty strong, and we're on a bullish leg now, and it seems to be strengthening at this point. Okay, moving now to the stock indices as we come in towards the end. Let me just change this from 20 years, go back to normal 2 years on it. So let's go to the S&P. Now, one of the things I wanted to tell you is that on the S&P, of course, we did make a new high on the S&P. So let's admire that. Fantastic week that we had there, breaking to a new high. But the MACD hasn't crossed over yet, so it hasn't recognised the resumption of the strength in the market. But is the S&P the best market? I want to just give you one statistic. The number of stocks above their 50-day moving average is declining. That's not a good thing, but we've seen that before several times in this run up here. But one other thing that's pretty alarming is in the commitment to traders report on the index futures contracts, the number of longs jumped by 100,000. That's a big jump. The typical numbers are like 20, 30,000 increase or decrease, and it's the biggest jump that we've had since in a year, in 12 months. So it is the biggest commitment that people have put into the long side of the trade for a year in the market. And a year ago, of course, we were down here at this point here. So this is the last time we got as bullish as we are and put so many bets on the table. I'm not sure what that means. It means maybe we're about to leap substantially higher, or maybe this has got really much too crowded as a trade. But as I say, the weekly MACD is not positive yet. The daily chart is looking reasonably good, although this isn't a powerful punch to new highs. That's a little bit disappointing. And if you compare it to the other markets, it's not the most attractive anymore. The Nasdaq itself is more attractive. But we have got support below. But if I were putting money and I had a limited amount of capital, couldn't put money into every market, then I would be looking at other ones than the S&P, which I feel is fraught with danger. Let's look at the Nasdaq next. So the Nasdaq is looking stronger. Let's look at the weekly chart here. Look at this breaking here. Nice, positive, powerful break here. The MACD about to make its cross to positive here. That's great. Lovely pattern of higher lows in here, clearing this resistance nicely, and with a nice big positive white candle there, so giving us an indication of strength of the break. The RSI the price action was good. Bollinger Bands were expanding. That is great. The ADX here is 17. The ADX on the S&P is at 11. That's a really low reading for a bull market. It doesn't say strong bull market. That ADX reading 17 is fairly good, and it's the highest of the bunch of all of them. The next highest is the German market, the D30, which is the one I preferred previously, but now I prefer this one. And this is a complete rotation, because remember how the tech stocks had sort of kind of split up, and the FANG, so you had bear markets, but now in some of the stocks and new highs in Facebook and some of the other stocks, but now they're much more as a group, they're bullish, the tech stocks, and leading, as was the case earlier in the bull market, resuming their role as a leader over the broader S&P itself. So this is now, I think, top of the list, and looking good and looking ready to go further. Next, top of the list, if you like, is and a little bit behind is the DE30. So a weekly chart here. This is not, there's a weekly chart here, hasn't got a big white candle, isn't stretching forward to new highs. It's looking good, but there's some loss of momentum here. And the MACD has crossed down. It's actually crossed down in this bull market. And so this has really lost its shine. It has got an ADX of 15, but the Nasdaq has got a higher ADX reading, so a stronger trend is the message there. So this is it. It's looking a bit toppy, looking a bit heavy. Not to say it's a bear market, going to turn into a bear market, but looks like it's struggling, finding it harder to advance. So my favorite has moved to the Nasdaq. The FTSE, so the UK 100, if we look at this here now, the thing about the FTSE is a completely different chart. Here, we're not in blue sky at all. We've got, in fact, massive resistance. Let me just show you how big that resistance is. Let me go to 10 years. So look at the size of that resistance there. So we're above all that in those indices there, but we're heading into it now. With the FTSE. So the FTSE has had a great run, it's pushed, but now we're at the bottom end, if you like, of what should become a very difficult area to pass through. And so I do expect the FTSE to start to lag in its, even if all the other stock markets going up, I would imagine the FTSE is going to go to the bottom of the list of bull markets because of this resistance being so strong. It did go up quickly, as we predicted, because of this fall being so quick. And so thinking about the crude oil and things, but now we've come to, the equivalent of $95 to $120 on crude oil, this massive area of resistance, which is even more massive in the FTSE. So I do expect 7,200 area to start to exert more pressure on the market. So I would look elsewhere if you were looking for a bull stock index. Right, Dan, do we have any questions?
No, that was it. Thank you, Trevor. Just the request for the pound yen chart. No, thank you very much, Trevor. If that's all, I think we can finish up.
Yes, okay.
Well,
I thank you all very much indeed. And thank Dan particularly for looking after us and hosting.
Thank you very much, everybody. Thank you for attending, and hopefully see you again the same time, same place next week. And please don't forget that we'll be posting this webinar to our YouTube channel in a few hours or so time. So if you came, I don't know, later on and you want to watch from the beginning, or you just want to watch a small piece again, you can head over to our channel and do so. And please don't forget to subscribe and click on the bell to get notified. Okay, Trevor, anything else?
No, I just watch out on the FTSE and be more selective on the stock indices than we have been before, because where they were moving together. FTSE's bumping its head. The Nasdaq is now taking on its role, resuming its role as the leader. The S&P looking a bit dangerous. Crude oil looking exciting from a long-term point of view. Dollar, we've got some, fundamental news, important fundamental news coming out, and that could be decisive for it. The behavior has been quite iffy on the bounces in those markets, so watch that there. But they're all moving together. There isn't one over on the right-hand side of RRG and the others over on the left. There's nothing like that. They're all on the left and pointing southwest, looking weak and looking like getting weaker. All right, Dan, thank you very much indeed, and have a great week, everybody, and may the trend be with you.
Cheers, Trevor. Thanks, everyone. Bye-bye.
Thanks. Okay. Bye-bye.